Hirsch is with us, CEO. To say he's with Hirsch Holdings is baloney. He is the Stock Trader's Almanac, and I will make it as clear as I can. You pick it up, you turn up page, and there's common sense and wisdom. Jeff Hirsch, which is the most important page right now in the Stock Trader's Almanac?
Oh, it's the best 6 month switching strategy. We had our sell signal April 2nd. So, it's the main seasonal moves is what it is. I think it's page 54, if memory serves.
Yeah, it was page 54, say sell in May and go away?
We don't go away. We reposition. We saw some things. We had the Dow and the S&P have their best 6 months, November to April. NASDAQ goes to June, best 8 months. Tech definitely taking it on the chin right now, but what?
I'm looking, Paul, we're on YouTube. Good morning on YouTube. I think Jeff Hirsch is coming to us from a bar. He closed the place down. He closed the place down.
No, I'm with my son. We're looking at schools down in New Orleans. So I'm at the Hotel
Very
Fontenot.
cool. Very good. Go Tulane.
Down in the lobby.
Yeah, go Tulane.
Yeah, we're going to Tulane on Monday. We went to Loyola. He's in the
very
music
good.
Very
industry
cool.
vibe. So, yeah.
Can you imagine?
So we're going to do some Jazz Fest too.
Can you go to? Can
No.
you imagine school in New Orleans?
No, I could not. For me,
Bremer
for
went
me
to
at least.
school down there.
No.
Really?
Yeah, that's how he got twisted.
Okay, very good. Hey, Jeff, what do we do? This is an election year. What does that mean for stock markets, generally speaking?
Well, I mean, the last 7 months of election years, there's only been down twice, 2000 and 2008. So this dip, I ran a study using election years with the Q1 up really big. And after that, you see this April-May sell-off, which is, April's usually the best month of the year. So it's a little bit concerning when you have April being down like this. But after we get through Memorial Day and into June, the election years look strong. I mean, with the sitting president running, it's 12.8% in the S&P. And you see some of the charts I put out there on Twitter feed or wherever. We're in that corrective phase. We were looking for about 3 to 6%, during the worst 6 months here, some chop through, convention time and into Q3. But generally, we rally in the fourth quarter. And what we're seeing now with this big Q1 and the correction in April is a lot of chop for the next couple of quarters, next several months. You never know exactly where that bottom is. I'm looking at 4,800 as a level on the S&P as some support, where the old 2022 highs were, and where that gap up in January was when we sort of broke out a little bit. But right now, I'm not expecting a whole lot. I mean, you were selling about going away. We don't go away. We reposition. We're in utilities and, some bonds, and we're just not doing new buying and tightening up stops and getting rid of losers and just sort of repositioning during this sort of cautious phase between the end of the best 6 months for Dow and S&P and end of the best 8 for NASDAQ.
So, Jeff, I mean, are you one of those folks that feels like we need to see improved breadth in the market as opposed to what some folks are calling the Magnificent Seven or however many names are in there today? Do we need to see better breadth, or do you not care?
It doesn't hurt. No, we care. I mean, you always have leaders. There's been periods throughout the market's history. We've got handfuls or, the Nifty 50, whatever you want to reference, that you've got, a smaller group of stocks leading things. But, we don't just look at breadth. We look at new highs and new lows. I mean, we've been running the weekly. If you look at the back of your almanac there, Tom and Paul, you can see the weekly indicator record keeper. I mean, it's sort of gives you a framework for what to do, but we track that in the newsletter and all the time. The weekly stuff out of Barron's, the lab pages, and it's been concerning. We've also, just seen, the sentiment up really high. That can stay there for a while, but yeah, it'd be helpful if we had. Go ahead.
With the heritage, Jeff, of your family, in the decades you've been doing this, is there too much market timing, market guessing going on right now?
I mean, for individuals, there always is. There's too much information, period. I mean, there's too much, there's a million newsletters out there. There's a lot of trying to time everything back and forth.
Yeah.
So yeah, but I think timing is important. Timing is critical, especially, in our business. But you have to time it right. You have to use things that make sense. I think people use too many tools a couple of different indicators like seasonality and MACD works great for us. But you start throwing too many things in there,
Right.
and you confuse things. But there's also a period of time where you can just leave the bat in your shoulder and wait for the fatter pitch. And I think that's where we're at right now. There's no need to always have to be trading. So more so, too much timing is too much trading. Too much always got to be buying something.
Are Microsoft and Google part of the fattest pitch?
They're not yet. I mean, we had the fat pitch in October. I think we wait for a fatter pitch. Super Micro's looking attractive again. Down. That's one of our picks. So I know that's not one of the 7, but I think you can be patient here. I think you can be patient here. I don't think there's a big rush. I think we're going to have some opportunities, especially with the news flow, whether it's coming out of the U.S. political scene or the international geopolitical scene or the Fed and earnings. There's plenty of things to keep this market jittery for several months. And I think we need to be patient.
Jeff, something new for you versus, in past years with your father would be ETFs. How do you play ETFs these days?
A lot. I love. We use them. I mean, back in the day, it was when the mutual funds came in.
Yep.
I think you see, a lot more churn and chop, and there's definitely some manipulation that goes on with always trying to move things through these new products. But it's a great vehicle for individual investors. I think it's a boon, for individuals to get into. I mean, we trade commodities too, and I prefer to trade ETFs because I'm not really that into all the contango and all the different contracts. I think it gives individuals and brokers, advisors, whatever, some great vehicles to invest in different sectors of the market, different classes.
I get tons of requests from people who say, Tom, I'm a newbie. What book should I read? Stock Trader's Almanac is not a book, but it is just page after page of common sense. It's been identified with the Hirsch family since time began, and Jeff Hirsch carries the flag forward. Jeffrey, thank you so much. Hirsch Holdings from New Orleans.